Hi guys, welcome to the video. My name is CA Varshith Gowda and I am here to make your accounts a little bit easier. Yes, today I have come back with another video regarding accounting processes. Yes. So basically in this part, in this video, we'll be discussing about how from the point transaction happens till the transaction lands up in your P&L and balance sheet, how it travels through various steps or processes that we have is what we are learning in this video. Okay, it is very important guys, it is very important to understand how transaction is recorded and how it lands up in your P&L and balance sheet. Okay, if you have this worldview, okay, pakka the way you understand accounts will change. However, we have this accounting process as part of your initial units, you would have known, but I feel students ignore this part a little bit. I don't want you guys also to ignore. Please watch this small video. Trust me on this, your understanding of accounts will change after this video. Pakka, no doubt about it. So if you're ready, aram se sit back and relax and watch this like a movie. Okay, and just try to understand what I'm trying to tell in this video. That is all you have to do. All of you. Okay, na? ಹೇಳ್ರಪ್ಪ. ಸೊ ಓಕೆ ಆದರೆ ಶುರು ಮಾಡೋಣ. ಬನ್ನಿ ಫ್ರೆಂಡ್ಸ್, ಶುರು ಮಾಡೋಣ. ಓಕೆನಾ? So what I'll do now is I'll take some 5 or 6 transactions as example. Okay, simply to start up with. Then I'll show you how it lands up in balance sheet. Okay. Let's start. Some 5 transactions I want. So what are these 5 transactions? Say Mr. A introduced capital of rupees 1 lakh. Okay, now the business has started. He has introduced capital. Who? Owner. Second, then he purchased goods worth rupees. They purchased goods worth 50,000 rupees. Next, sold goods worth rupees 90,000. Okay, so both are cash guys. It is cash purchases. Here also it is cash sales. Okay, both transaction paid rent of rupees 10,000. Fifth, he purchased furniture of rupees say 20,000. Okay, yeah, all of you. So these are the 5 transactions that I'll be taking. These 5 transactions have happened now. Okay, how these transactions from the point they have happened till they land in balance sheet, you will see now. Okay, see how it goes. Also, you see, I need the information of closing stock also. If you are already done with inventory chapter, by then you'll be knowing that how closing stock comes into books of accounts. How does it come? At the end of the period, what will I do? I will go to the go down, count how much stock I have, I'll value it, then that number I will incorporate it in books of accounts. Correct? No? So for that, now I've gone to go down, I've checked, I've got inventory worth how much? I've got inventory worth say bought for 50. No, I have 10,000 worth closing stock lying in my go down at the end of my period. Okay, I have gone to go down, I've come to know that also here. Okay, next. Then guys, we are done with the demo transactions. Now we'll start. So first thing is we have to record all these transactions. How do we record all these transactions? Via journal entries. I hope you know how to draft journal entries. Okay, the first one, Mr. A introduced capital of rupees 1 lakh. So here what is happening guys? What is the journal entry? Please try to comment. Please try to tell the entry, because good. Again, you're revising the entries. Good thing only, no? Try to comment it down. Okay. I'll see your comments. The first thing is, whenever owner introduces capital to the business, and while you are drafting journal entries, your point of view should be business. That means you should assume that you are business. Now, what happened to business? The moment owner introduced capital, money is coming to business. So cash is increasing. Then my liability towards my owner is also increasing, which is called as capital. Correct? No, my cash is increasing, my capital is increasing. Cash is an asset, increasing, debit. So cash account, debit 1 lakh. 2, capital increasing, credit is 1 lakh rupees. Done. Done, guys. Second entry. What was second? Purchased goods worth 50,000. So the moment I purchase is an expense, increasing, debit. So purchases account, debit is how much? 50,000. Then I've told it's cash purchases. The moment I make cash purchases, my cash is decreasing. My cash is an asset, asset decreasing, credit. To cash account is 50,000. Awesome. Done. Next. Next, I have made sales worth 90,000 rupees, guys. If cash sales only. The moment I make cash sales, cash is inflowing to me. So cash is an asset, increasing, debit. So cash account, debit. How much it is? Is 90,000. Then sales. Sales is my income. Income increasing, credit. So to sales account should be 90,000 rupees. Done. Then third transaction also recorded. Fourth one is he paid rent. Rent is an expense, increasing. Expense increasing, debit. So rent account, debit. How much rent did I pay? 10, no? 10,000. The moment I'm paying rent, my cash is decreasing. So cash is an asset, decreasing, credit. So to cash account, it will be 10,000. Then what did I do? I have purchased furniture. The moment I purchase furniture, furniture is a asset. Asset increasing, debit. So asset increasing, debit. Furniture count, debit. Guys, furniture is my non-current capital asset, which I have the intention of using it in the business. That's why I'm not debiting purchase. I'll debit purchase only for purchase of those goods which I purchased with an intention to sell. Am I purchasing furniture with an intention to sell? No. I am buying furniture to use it in my business. So it is a capital asset. Furniture is an asset, increasing, debit. 2, I would have paid money. My money, cash, is decreasing. Asset decreasing, credit. So 2, cash account. How much? How much furniture did I purchase? I purchased furniture worth 20,000. 20,000. Done. So done. I've recorded all the transactions. Okay. I've recorded all the transactions. The immediate next thing is from journal, I will post all these in ledger accounts. Basically, what we are doing in ledger, nothing, guys. We are just summarizing. We are just classifying in ledger process. What we'll do, for whatever accounts that we have used in journal entry, for each account I will open one T-formatted ledger, and whatever transactions, in whichever transactions this ledger account is used, the reference of that I will give it in ledgers. I'm summarizing everything. Now say suppose I've purchased, in a year I would have purchased various furnitures. So everything will now be summarized in furniture ledger account. That's all. So furniture, nothing else is happening. Whatever journal entry I've already passed, that I am classifying and summarizing. That's all. Nothing new I am doing. You'll see here, you'll understand. So how many new accounts have I used in journal entries? For all the new accounts that I've used in the journal entry, I will open one ledger account. If you see, cash account, capital, purchase, cash already considered, sales, rent, furniture. 1, 2, 3, 4, 5, 6. 6 accounts I have used these journal entries. So I will open 6 ledger accounts. So, tell me, fast. First I'll open one cash account. Then I will open one capital account. I will open one purchases account. No, I will open one sales account. Then I will open one rent account. I have not opened rent account. Then what, guys? Sales, purchases, cash, furniture. 6 accounts I opened. Why? These are the 6 accounts that I've used in the journal entries that I've just passed. So now I will summarize it in these ledgers. So how to summarize? Come back to ledger. Come back to journal. The first entry is cash account debit to capital account. This I have to post it in ledgers. How to post it? 2 accounts are involved: cash account, capital account. That means entries should come in cash ledger account also, capital ledger account also. So come to cash ledger account. Sir, in cash I'll put, sir, which side, sir, debit side or credit side? Confusion now. It's very simple. Just see what is the journal entry. Journal entry was cash account debit to capital account. In the journal entry, cash account in itself is debited. If you see, cash account in itself is debited. Correct? No? So that means in cash ledger also it will come in debit side. So this is always debit side and this should be credit side. Which side it will come? In the journal entry, cash account is debited. So in cash ledger also it will come in debit side. Same thing. So 2. Then what to do? See the other account. The account in the other side. What is the account in the other side? The account in the other side is capital account. So use that account. 2. Capital account. 1 lakh. Done. Awesome. Next. Guys, the same reference should come in capital account also. So if you see in the journal entry, cash to capital, capital is credited. So in capital account also it will come in credit side. By what is the other account? The other account is cash. By cash account it should be 1 lakh. One more way to understand this is that if you see in cash account it came in debit side. So generally in the other account, that is capital account, it will generally come in the opposite side only. This is for your understanding, Ashte. But it is always better to follow the method I taught you. See the journal entry and say, suppose we are talking about cash ledger account. In the journal entry, cash account is debited. In cash ledger also, it will come in the debit side. In the journal entry, capital account is credited. In capital ledger also, it will come in credit side. So simple. Now with this ideology only, we'll post all the entries. Purchases to cash. That means entry will come in purchases and cash. Purchases is debited in the journal entry. The other account is cash. So 2 cash account 50,000. One more entry will come in cash. Cash is credited in that journal entry. Purchases to cash. So it will come in credit side. By purchases account. By purchases, because in the journal entry we are doing ledger posting in cash ledger. So for cash, the other account used in the journal entry is purchases. So by purchases 50,000. Done. Next we have sales of 90,000. So cash and sales. The cash is debited. So to sales account 90,000. So in sales account it will come in credit side because sales account is credited. So by cash account it should be 90,000. Done. Next transaction. I've paid rent of 10,000 rupees. That means rent to cash. Rent is debited. So here also it will come in debit side. To the other account is cash. To cash account. I've paid 10,000 rupees. Then I've purchased furniture of 20,000. So furniture to cash. Furniture is debited. So it comes in debit side. The other account is cash account. So to cash account it should be 20,000. Guys, now I'm done with ledger posting also. Done. Ledger posting is also done. So done, na? Can we go to the third process? Hey, no. Third process. Before going to the third process, there is one more thing. Whatever ledger posting you have done, no, that ledgers is still open. You have to close them. How to close them? Very simple way. First, what you have to do is go to that ledger account. Okay. Now this is a ledger account. See if it is a balance sheet item or P&L item. So that means cash. Cash is an asset. Asset goes to liability. That means these accounts should be balanced. Anything which goes to balance sheet should be balanced. What all will go to balance sheet? Asset will go to balance sheet. Liability will go to balance sheet. Capital will go to balance sheet. All these are balance sheet items. These should be balanced. So let's balance it. How to balance? Take the highest side. Which is the highest side here? Debit side 1,90,000. Subtract the lowest side 1,90,000 minus 50. It is 1,40,000. So the balance of this account is 1,40,000. So I'll write it as by balance carried down, because I want to carry these balances, no? Because I want them next year. Correct? No, assets are those things which give benefits for more than 1 year. So it is very important for me to carry their balances to the next years as well. So by balance carried down, it should be 1,40,000. So it's a balance sheet item. I have balanced it. Which are balance sheet items? Asset, capital, liability, reserves. These are balance sheet items, and it will go to balance sheet. Capital is what? Capital is also balance sheet item. So I will balance it. Which is the highest side? 1 lakh. Lowest side 0. 1 lakh minus 0, 0. Balance is 1 lakh. 2. Balance carried down 1 lakh. Done. Next, purchases is what? Is purchases balance sheet item? No, no, no. Purchases is an expense. Expenses or income should always go to P&L account. It will not go to balance sheet. It will go to P&L account. In P&L account, it is used for calculation of net profit. Correct? No? So purchases is an expense. Now the balance of this account will go to P&L account. How much balance we have? 50,000 minus 0. 50,000. Entirely I will send it to P&L account. Done. Next. Sales is what? Sales is an income. Income should go to P&L account. So I'll transfer this to P&L account. 90,000. Done. Okay. Next we have rent. Rent is what? Rent is an expense. It should go to P&L by P&L account. 10,000. Then sir, next furniture. Furniture is again an asset. Asset should go to balance sheet. So this account should be balanced. So by balance carried down, it should be 20,000. So done, guys. Now we are done with posting of ledgers. Done. Now we are completely done. Now, once this is done, what is the next process that we do? Guys, whatever accounts till now we have prepared, no? All these accounts we have prepared by using the logic double entry system. Yes or no? 100%. We have used the logic double entry system. So what we are supposed to do is, the balance of all the ledger accounts should be taken to trial balance. All the debit balances of the ledger account should be put in debit side, and all the credit balances of the ledger account should be put in credit side. Once we put this, no, technically the trial balance should match. Why? Because while doing our accounts, we have followed double entry system of accounting. That means for every debit there was a credit. Ultimately, all the debits and credits should match if you have done your accounts correctly. So that test we are doing in trial balance. So shall we do it? Sir, how to do it? Let's do it here. So this will be the format of trial balance. Okay. Now what I'll do is, all the ledger accounts which I have opened, no, the balances of those ledger accounts I will take now. Okay. Sir, how to take? Come to the first account. Cash account is what? Asset. Okay, done, sir. Now this cash account, will it come in debit side or credit side is the question. So that question answer is very simple, guys. To find out whether an account has debit balance or credit balance, 3 criteria we have. First one is, in a ledger account, if there is a ledger account given, and if debit side is more than credit side of in the ledger account, then that account is said to have debit balance. Okay. If credit side is greater than debit side of a ledger account, then that account is said to have credit balance. That is one simple way. Okay. If they have given you the ledger account. So sometimes ledger account is not there, sir. What to do? Simple criteria, guys. Okay. Take that account. If that account is coming in asset side of the balance sheet, then it has debit balance. If that account is coming in liability or capital side of the balance sheet, it has credit balance. Asset side, debit balance. credit or liabilities or capital side, credit balance. Similarly, in your P&L, if an account is coming in income side, it has credit balance. If an account is coming in expenses side, it will always have debit balance. Simple logic. Okay, with that logic, let's prepare trial balance. No cash account. Cash comes in the asset side of the balance sheet, so it will have debit balance. One cash account has a balance of 1,40,000. See, just now we balanced. No, it has balance of 1,40,000. So it will come in debit side. Then we have capital. Capital comes in the liability side, so it has credit balance. Capital 1 lakh. Purchases. Purchases an expense. It has debit balance. I told you expenses, debit balance, income, credit balance. Correct? No, so purchases 50,000. It has debit balance. Then sales has balance of 90,000 rupees. Correct? No, 90,000. Sales is income. Income will have credit balance. Then rent. Rent is an expense. Expense will have debit balance. Then furniture. Furniture is an asset. That will have debit balance. 20,000. So done. All the ledger accounts is being posted in. We have put it in trial balance. Now what trial balance is one of the statement of accounts. Huh? Is it part of your accounts? No, 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 no. Trial balance is just prepared to check the accuracy. Okay, whether we have followed our accounts correctly, whether double entry system of accounting has been followed, to check that. Because after this, I'll be proceeding with preparation of final accounts. Now, before going there, I want to be sure whether have I done my double entry system of accounting correctly. So to get an answer to this question, I'm preparing trial balance. Now we prepare trial balance. All the debit balances have taken, all the credit balances have taken. Now if I've done everything correctly, my debit and my credit both should match. So I've prepared. Now what is the next thing you have to do? You're supposed to total it. Okay, come on, let's total it off. Rent 10, 20. Guys, one more thing, what we have not done is, for small entry we have not taken. What is that? We have done two more things: rent payment and furniture purchase. Okay, what is the entry for rent? Rent to cash. Rent is debited. Cash account was credited. No, it should come in credit side of cash. So by by rent account 10,000. Then we have purchased furniture. Entries furniture to cash. Cash account is credited. So that also should come in credit side of cash by furniture account. So it is 20,000. So this we have omitted. Error happened. Okay. Now let's balance it. The balance is 1,90,000 minus 50 minus 10 minus 20. So 60, 70, 80. 1,90,000 minus 80. Balance should be, by balance carried down, 1,90,000 minus 80,000 is 1,10,000. So this is the balance that should go to cash account. 10,000. Okay, guys. Done. So that cash for furniture and purchase, again the other part, furniture to cash, purchases to cash. In both the cases, cash is credited. So it should come in credit side of your cash account that we have posted, and now we have taken the rectified balance. Now let's see if the debit side and credit side fits matching. Okay. Now what you'll do, I know you're supposed to add it, but before add it, one important step is there, guys. You should not forget. Before adding, one important step is there. What is that step? Before adding, please pray to God. Please pray to God before adding, so that your debit is equal to credit, or else it becomes a problem in your examination hall. Okay. So first, Before adding, it is very important to pray to God. So now let's add 110, 50, 60, 170, 190. Debit side is 1 lakh 90,000. Credit side is 1 lakh 90,000. Now if you see, your debit side and credit side is matching. That means whatever accounts we have done till now is mostly correct. Done. Trial balance done. Mostly we have done correctly. Both are matching. Next, what is the process? That's all. Once trial balance is done, we can start with our final accounts. That means let's prepare our P&L and balance sheet. So let's prepare our profit and loss account. Okay guys. Trading profit and loss account, and next we'll prepare balance sheet. Now from the trial balance, all the asset liabilities balance will come to balance sheet. Capital, assets, liabilities, capital balances will come to balance sheet, and income expenses balances will go to P&L. That's all. First, cash is asset. It comes in asset side of the balance sheet. So cash, much cash we had? 1 lakh. Next what we have? Capital balance of 1 lakh. Capital comes to balance sheet, 1 lakh. Then purchases 50,000 expense, it come in P&L. 2 purchases 1,000. Then we have sales is an income, comes in credit side by sales 90,000. Done. Next, rent is an expense, comes in expense side. 2 rent, it is 10,000. Then we have furniture is an asset, so it comes this side. Asset, it will come to balance sheet in asset side, that is 20,000. I hope you know this side, and this is liability side. So done. Everything I have put it in balance sheet and P&L. Anything else? If you come back to our list of transactions, we had closing stock. The closing stock is only incorporated at the end of the period. So what I'll do, I'll go down, count how much closing stock I have, I'll value it. That value I'll incorporate it in books of accounts only in the end. So what is the entry that I'll pass? The entry is, since I'm incorporating inventory now, my inventory asset is increasing, inventory account debit 2. I'm incorporating this in trading P&L account. So inventory account debit to trading account. So this is our trading account. So come here, inventory account debit to trading account or P&L account. So I'll put this as trading P&L account. Okay. Now if you see in the entry, trading account is getting credited. So entry will come in credit side by closing stock. How much was my closing stock? That also we have written, no, 10,000 was my closing stock. So I'll put it here. Trading P&L. My closing stock is 10,000 rupees. I've incorporated my closing stock also. You should not forget, closing stock is an asset. The balance of asset should be taken to balance sheet. That's why this will also come in balance sheet. Entry much? 10,000. Done guys. The closing stock also I incorporated. Now let's find out what is my profit. 2 net profit. What is my net profit? 1 lakh. 1 lakh minus 50, 50,000. 50,000 minus 10, 40,000 is my profit. What will happen to profit? Guys, this profit also belongs to owner only. I'm liable to pay, me, the business, I'm liable to pay this 10,000 profit also to owner. So that's why I will add it to the liability towards owner. Generally in balance sheet, which account represents the liability towards owner? Capital. That's why we are adding current year profit also to the capital. So plus net profit should be 40,000. So total it has become 1,40,000. Done guys. So the profit also we added to capital. Inventory also we have incorporated in trading P&L account. Now one question should come, sir, inventory we incorporated. Inventory coming in balance sheet makes sense because it is our asset. Sir, why is it coming in P&L account? Guys, about this we have detailed discussion in one of my other videos called as inventories, which is there. in the same YouTube channel. Please refer that. We have had an in-depth conversation as to why closing stock will come in P&L also, and why it is coming in balance sheet also. Okay, it is very simple. Why it is coming in balance sheet? Because it's an asset. But why is it coming in trading P&L account? That discussion we have had in that video. Please watch it, and if you like it, please drop a like. Don't forget. Now, now the final item, that is, have we done everything correctly? Yeah. Now to know that, again we have to add our balance sheet. Okay, asset side and liability side. If both are matching, that means what? We have done our accounts correctly. Now what you have to do? Add it. Hey, I know, add it. Before adding it, what I told, please pray to God so that your balance sheet should tally. If it doesn't tally, no problem. So what to do? Please, before adding, pray to God. Pray to God. Now add it. Asset side 20 plus 1 lakh 10 plus 10. It is 1 lakh 40,000, and liability side 1 lakh 40,000. Whoa! My asset and liability side both are matching. So did you see? That means we have done our accounts correctly from the point of transaction happening till the transaction came and landed in P&L and balance sheet. We have seen how the flow has happened. Guys, this flow or process is very, very important. Okay. After watching this video, I am sure your understanding of accounts would have happened even more better. Okay, very important. And if you have liked the video, if you have enjoyed this accounting process, then please don't forget to drop a like in this video, and please share if you have liked this video. With that said, I will again see you in another video. Till then, bye guys, all the best. See you in the next one.